Hey everyone, it's Evan here from the Trade Risk on Friday, June 30th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So happy Friday. We're going into kind of a quasi-long weekend. We got a half day on Monday, and then the markets are closed on Tuesday. That's for Independence Day, 4th of July. So keep that in mind. Probably be some light trading heading into or basically all of next week as we kind of kick off officially that summer trading where you can get that low volume, can get some volatility, of course, but just keep those market hours in mind for next week. Let's get into the charts here with the S&P 500 SPY ETF. You can see rather dull day here on Friday, up 18 basis points, closed down just about 0.5% here on the week. And actually, we should still be looking at the cash market here just because we got that downward slope, that ex-dividend on the SPY ETF still skewing the chart just a bit. So here we're going to look at the cash market for the S&P 500. And you can see here once again, really have gone sideways, right? All of June, we have effectively just moved sideways in between this 2420 and 2445 range. And really what we have here is, well, actually, let's one of the things I wanted to show you in this video, we're going to look at the Market Health Dashboard here. This is a tool that that is available to subscribers. It's pretty self-explanatory. Basically, the way we view the market here is a three-factor approach based on trend, momentum, and breadth. And we score each of those both in the short term, so basically looking at the next week of market technicals and then the next month of market technicals. We're going to look here at the short term, and really what we can see here is a pretty split market. We have the Qs, which now have bearish trend, bearish momentum. They've been that way now for a few days. Meanwhile, you have the IWM, which has emerged with still bullish trend and still holding neutral momentum. So kind of the best in class right now, and this is nothing new. We've sort of been talking about this for the past couple of updates. And you get the SPY, which is pretty much the middle of the road, and breadth. This is sort of a unique way we calculate breadth, but overall, we view that pretty neutral here in the short term. And our outlook heading into next week, and really for most of this week, I think, almost all of this week, was neutral and chop. So just basically a range-bound market in the short term. Long term, you can see everything's still bullish here. You can see a little bit of neutral momentum kind of setting in here for the Qs and SPY, but everything else outlook here on the longer term charts are still bullish. So if we kind of move back here to And I can link that up if you guys want to, actually read more or hear more about how those values are calculated. If you want to get access to it, I'll put a link in this video. You can check it out. But when we look at the S&P 500 now, yesterday was a pretty interesting day. This was a very wide range day, Thursday, here for the market as we traded all the way down to 2405. So we broke all the way below this last month's range, and then we popped higher into the close, and we closed right at support, right at this previous support where we've closed several times in the past, and then we had a little bit of an uptick here into the end of the week. So the question heading into next week is, did support hold? Clearly it held first time around, but are we good? Are we going to be able to bounce higher from here? Our outlook in the short term, certainly based on our process anyway, is neutral and chop. And if we did just hold support and we expect to kind of chop around in this range, call it a 20-25 point range, now can we make it back up towards the highs there and challenge these old highs? That's certainly the way, that is the way we look at it. That is part of our process, and certainly kind of how we're positioned at this point to see if we can bounce up to this upper range. Now the Nasdaq though, that's going to be an interesting one. Let's take a look at there, going a little out of order today, but this is an interesting chart, and this is where we've been sort of pessimistic on the Nasdaq in our last video update. We talked about, in fact, the short position that we had on here. And this is still, and again, if we look just objectively based on technicals, trend and momentum, certainly the way we view them anyway, they're both still bearish here. But we are holding, we're right at this support, right at support, which held in early June. So again, we kind of ask ourselves, are we going to hold here heading into next week? Can the bulls just, step on this, step in here, bid this market up, and then can we sort of float higher, and maybe we stay range bound heading into, at least the beginning of summertime for the Qs. I was looking to see if we could get a little more of a flush lower here in the Qs, down to say 135, 136. It hasn't happened yet. So something again to keep our eye on. But again, the Qs definitely the damaged bunch out of the groups. There's better places to be. We're going to go through some of the sectors individually later on. But for now, semiconductors, technology, Qs, this is a tough area to be. We see that pressure. We're at sort of an inflection point. Let's see how this one plays out. But for us, as far as that short position, if you recall, so we got short here on this day on the 26th. We covered some here on the 27th. We covered some yesterday, and we exited the rest of our trade here on Friday. So we're no longer short the Qs. We got sort of what we're looking for. We held it into Friday to see if we could get maybe a gap down, maybe some capitulation. Didn't really happen. This could turn into a bear flag. Again, we could, leg lower here, break through this support definitively, and, the Qs would be in a bigger pullback situation. But for now, we captured what we were looking for out of that trade, and we're moving on. So no position there in the Qs anymore, and we're just going to be kind of waiting and seeing how this reacts at the support level, how this resolves itself. And then the IWM, you can see still holding up, getting a little messy in here, but overall still holding up in the upper kind of end of this channel here. If you look at the weekly chart, you can see trying to put in maybe a higher low, trying to build out this higher level base here. So I still think this 139 area, more or less, these lows right here from essentially last week, those are important. If we start to break below that in the IWM, then that would certainly be some more cracks and vulnerable, more vulnerable sort of price action if we were to start to break below last week's low. So I think that's a pretty good line in the sand, and for now we're going to see if the IWM can stay bid and stay resilient just under those all-time highs. So that's sort of the market outlook. Actually, there is one other thing here that I wanted to talk about, was the VIX. And we don't talk about the VIX too much here in these videos, but this move on Thursday was pretty impressive. We had a 50% intraday rally here in the VIX. Now, it was completely faded into the close, or not completely, but almost completely. About 60-70% of that pulled back into the close here. But this type of move is sort of uncommon to see such a intraday range here in the VIX, and that to me, again, sort of maybe paints the picture there that there was enough panic or enough sort of capitulation there with that type of move in the VIX. And I understand we're coming from a 9 handle or a 10 handle, and not from, not a 50% rise off of a 14 VIX. I get that there's a difference there, but still that rush, that panic to put on protection from a fearful sort of market correction, that's interesting that there is still that much anxiety in this market. So that in itself I think is pretty interesting. I think if we look at the S&P 500 and we say, did support hold here? Can we now, was this a sufficient sort of panic and flush? Can we start to bid ourselves higher? That's what we're going to be looking for heading into next week. And again, it's light volume. So if we don't see, if we saw the selling kind of climax this week, and now now volume is kind of light into next week, that holiday volume, maybe we just get a drift back up towards those highs. Again, that's all speculation. It doesn't have to happen. We could completely start to break below the support, but we're at the inflection point. We know we want to hold essentially this line, and we want to look at maybe last week's or Thursday's lows here as a reference point, heading into next week and going forward. So that's the outlook. If you want to look objectively at sort of how we're looking at it, neutral and chop here for the next week. And on the longer term time frame, everything is still pretty kosher here, bullish pretty much all around, and the outlook there is still bullish on those longer term time frames. So that is the market environment. Let's take a look at some of the other major markets. We'll go to TLT, which had a pretty poor week. If we go to the weekly chart, you can see down 2%. This is a bearish engulfing bar. That means we gapped higher to start off the week, and then we closed at the lows here, and we engulfed the last week's price action. You can see if we were kind of rising higher in this channel, and now we had a bearish engulfing, breaking below this channel, that's certainly a reason to be concerned here for you bond bulls. We came into the week long TLT and we got out of it on Tuesday on this gap down here. We sold out of our position. We talked about in our midweek video, we wanted to see if the bulls could step in at this trend line support. They haven't. We closed the week near the lows, so I would be cautious here in TLT. I don't have, not high probability enough for me, or just not an interesting setup for me to short this at this point, but I certainly would understand the merit to do so. Volume picking up just a little bit, so definitely some cracks there in the bull thesis. For those that are waiting for those cracks to happen, there it is. And if you're a bull, you really just want to see us reclaim some of these fast moving averages, maybe get back within this channel here for potentially a higher low to get put in with this recent weakness. So that's TLT. Let's go to oil next, which saw a very nice close to the week here. In fact, a 7% rally here for USO. That's pretty impressive. It's had 5 weeks in a row of selling, so it's down, from as high as 1060 down to 950 where it closed. So we still lost $1 in the past 6 weeks of trading, but this bounce back was nice. Not quite on high volume on a weekly basis, but on the daily chart, again, you can see just kind of meandering higher there, not high volume, but again, a constructive maybe start here. Maybe this was a sufficient washout. For me, it's, again, I'm not looking at this at this point. I'd like to see it prove itself more, but for now, we're back above the 20 period. We saw a strong close. Maybe we get some continuation there. You could still draw this trend line down from these series of lower highs and lower lows that USO is still in. So again, I still think if you're tactical, absolutely you can play in this space from a longer term sort of structural basis. We're still seeing a downtrend here. Maybe it's early signs of it reversing, but again, I would just want to see a little more conviction there for me personally. Natural gas also had a little bit of a stance here on this week. We had 2.73% higher on the week. The weekly chart still looks pretty horrible, but if we go down here, you can see we are holding where we sort of wanted to, which was the 650 level, which were the lows here from earlier in the year in March, February. So we did hold this 650 level. Maybe you got some early stages here of maybe an inverted head and shoulders forming. If you drill down to a 60-minute chart or something, that might be a little clearer. Not too sure though, haven't looked closely at it. So anyhow, you could see Friday closed down on the day, but a bit of a hammer here. So see if the bulls can make some progress off this 650, put in this higher low, break above $7, and all of a sudden we're back in business. So UNG bulls maybe in the short term trying to get back into the swing of things there. And finally, the metals, GLD closing basically at the lows of the week. Again, still nothing impressive here for me. Just looks sideways, chop and frustration. Silver closing slightly lower on the week as well. Again, just looks like a lot of chop and maybe frustration there, not something that has my interest one way or the other. So that's gold, that's silver. I think that's all the majors. Let's take a look at some of those sectors. So IYT here, very impressive. We talked about this in the midweek video, and again, this is going out on the week. Nice relative outperformance on Friday, up 82 basis points. You can see on that weekly chart starting to make some progress, trying to emerge or at least challenge these highs here. This was an all-time closing high for the IYT based on the weekly close, and you can see it's all the way back to December and February of 2016 and then early this year that it's trying to emerge from. So it's had a nice period of consolidation. Let's see if it can continue to work itself higher. Again, you can see not quite a daily closing high, but pretty close. So IYT, I like it. Keep an eye on some of the components in that space. Financials, also finishing the week off strong, up 3%. Very impressive, basically invalidating that head and shoulders pattern that was at play here. And you can see not quite closing at highs here, but getting above last week's range or the last couple of weeks range, and we're starting to make some progress there. So XLF, like it, looks good for more, at least looks good as a leader. Materials are starting to perk up, and again, a lot of the other individual names. So even though the XLB may not be quite at highs right now, it is holding, or at least is trying to hold, this upper level support, perhaps right around 53.50. There's some individual names that are starting to perk up in that space. So materials, I like it. Industrials, kind of the same thing, holding this support. It's not quite at highs, but some of the individual components here starting to work. So I like materials, I like industrials, seeing some names surface there. On the downside, if we're looking at the laggards, things to avoid, again, semiconductors still look like they're pained. Look at this volume coming in on the sell side. Maybe it finds support at this rising trend line here. Maybe we're capitulating what we need to in the short term, but still, when we look at financials, when we look at transports, when we look at materials, industrials, there's plenty that are acting well above some of those fast-moving averages, near highs. This, again, if you're tactical, if you're a very nimble trader, I think there's definitely opportunity here. Whenever there's volatility, there is opportunity. So, don't think that I'm saying just forget about it. But from a structural standpoint, again, we're just seeing better opportunities right now than SMH, XLU, which is continuing to be sold off here, which is utilities coming back into maybe this rising trend line. This past kind of breakout level from May. If we look at the weekly chart, getting a bit of a kind of a breakout test here, it'd be a reasonable spot for utilities to bounce. So keep that in mind if you want to play in this space, if that's not too boring for you. And then finally, XLP on the downside, again, coming back into this old range here, getting close to really challenging the support here from multiple weeks, really multiple months. So this is a pretty important spot here. Now, this is a weekly chart, weekly view. We've seen 4 weeks of selling. Be a reasonable spot to see some bid come in here and maybe get a bounce. But again, you'd want to drill down, get that confirmation, do what you need to do based on your strategy, so on and so forth. So that's the recap for this week. Again, I hope you guys enjoy the day off, or the at least day and a half extra time back from markets being closed next week. And thank you so much for watching. Talk to you again soon.